Welcome, folks. I'm Pat Mitchell. I've been a professional day trader for the past 11 years successfully, and today we're going to be discussing how to ride a bull market. So first off, let's talk about some statistics and numbers and exactly what a bull market is. So in the exact same respect that a bear market is a 20% pullback from highs, a bull market is a 20% gain from lows. And what's tricky about bull markets is you don't really know you're in a bull market until you're already in it, right? Because of that 20% gain. And yes, you could say the same thing about bear markets as well, but generally you'll have a little bit of a heads up coming into a bear market where you have that correction at 10%. So there isn't necessarily a positive correction, so to speak, right? Like most bear markets will go down 10%, up 5, down 10%, up 10, right? It's kind of all over the place. Where a bull market, you don't know you're in a bull market until you're already in it. So some people might ask, how do you capture lows? And we will be going over the charts here in a couple of minutes, but it's important to understand catalyst. And what is catalyst? Catalyst is a big event, right? So if you watch, and please watch my bear market, because a lot of this I do discuss, and a bear market, as soon as we're coming into that 20% plus up to on average 35% from highs, that pullback, and we're nearing that support, that's when you want to be starting to go long. And that's what I discuss in my bear market, how to ride a bear market. A bull market is the same, but in reverse. So what you want to start doing, if you're looking from an investment or swing trading, long-term trading perspective, not so much a day trading perspective, then you do definitely want to start taking a look at going long into major support areas. Once we start hitting that 20% sell-off on the daily chart, 25%, if there's that major support, you're definitely going to want to start tapering in long on your investment, because at worst, or on average at worst, it's only going to go another 10% from there. And we can all handle a 10% loss or drawdown on our positions. If you can't handle that, then you shouldn't be trading, because it's about risk, right? And it's about timing. You can't be giving into emotion just because it wants to pull back that little bit further. The next thing really to discuss is bear markets you can almost set your watch by how much they will sell off, how long a bear market will last, right? The duration is about 9 months on average. And basically with a bull market, they're all over the place. So the longest bull market in recorded history lasted 12 years. Now, some will argue that we had a longer run up, but technically speaking, from the way it is written, it is a 12-year bull market. And that was from the end of the tech bubble up. And then what we had with the very shortest bull market was 25 days. They're all over the place. That's okay though, right? Like it doesn't necessarily matter. I think when it matters are the ones that are trying to capture lows to highs all the time. They're trying to almost gain too much. Now, if you're investing, you got to set timelines, right? And that's really important. Like how long are you planning on investing for? So that's going to be important. If you're swing trading, same thing. I think the next point is it's knowing and understanding what type of trader you are. What type of trade are you taking? Are you taking a day trade? Are you taking a swing trade? Or are you investing? Because they're all very, very different methods. And I could break this into 3 separate videos just on that per respected trading technique, right? So it's knowing and understanding that, what type of trader you are. Now, I'm a day trader. I'm a technical day trader. That's how I make my money. Do I swing trade? Yes. Do I have investments? Yes. But overall, I consider myself a day trader. So I'm going to talk to you about how to day trade a bull market. And we're going to go into the charts now. And what's really interesting about bull markets here, and the best setup that you can really do, and this isn't just bull markets, it's essentially at any dip, right? If you take a look at the daily chart, there is going to be a very specific setup that happens into support at lows here, right? Lows here, even lows here. There's going to be levels of support, and I'm going to use this. So if you take a look, you see where this, right at the crosshair there, where did it come into? It came right into the support pre-COVID, okay? You see how people start buying it that little bit sooner? So buying support on big pullbacks with very little pops back up or retracement, that's where I like to buy. Okay. Now that's a more broad statement. So we're gonna drill it down a little bit now. And I am going to draw something out for you because I think that is about the best way. And then I will find a daily chart example. So if we sell off, right, what we're looking for isn't necessarily dead nuts lows. We're not looking for that. It's very difficult to do. It can be done if you're willing to nibble into that. But we're talking about from a day trading perspective now. So we need to line up the daily chart with our intraday chart. So once we have held and bounced on lows, and let's say this is multiple days, and then we come into that support. Now let's take a look at the next day. So next day opens up, kind of dips into support. It holds that support and comes up. This isn't the best drawing tool, but that's supposed to be a candle. The next day, and this is the important part, this is called a day two continuation from lows. This is a banger, guys. When you are outstretched from the 9 EMA on the daily, and we open up after holding that support, we gap up a little bit, meaning we are going to open higher than the previous close. And let's say we open here. We want that dip into support in the morning. You buy that support and it will continue and it'll come into that 9 EMA. You can damn near set your watch by it. This is a day two continuation. I have tons of videos on my YouTube channel over them, as well as more in-depth learning and education at tricktrades.com. That day two continuation, especially if we are in major support after a big sell-off, that is your go signal. If you are trying to always capture those lows, you're probably going to fail. You want a level of confirmation, okay? That day two continuation, that's when the smart money comes in. The smart money will start nibbling on the way down, absolutely. But they are also looking for cues from retail as well. And that day two continuation, after it bounces and holds that, that's what you're looking for. That day two continuation is pure gold. So that's just one way that I'm looking to get involved with in a bull market. Now, let's talk about, okay, it sells off and it pops up and then it starts pulling back. Now, this is daily chart stuff, okay? Daily chart starts coming down. You want to start looking for consolidation, a couple days consolidation here. And let's say it's not quite on lows, so a double bottom, it's more of a higher low. And this will work for a double bottom as well, but I'll just draw a higher low, okay? You're going to have multiple opportunities in this time. So you see how it bounces, this little tick up, that is a green day. The next day, if it doesn't gap up, because we already have the setup for that day two continuation, if it doesn't gap up, let's say it gaps down, what you need to do is you need to watch that support test. Buy that support, buy it, because that's where it's going to bounce. And what happens there is consolidation. You're going to have multiple days in a row that will test highs and lows of that first bounce day. You can have up to 3 days where you can trade that consolidation. The reason for that is strength after that big sell-off, because it was just weak. So we're transitioning from weak to strong. It will never just become strong immediately. It doesn't work that way. There's psychology involved where people it needs to be proven to them. The reason why it needs to be proven to them, and maybe why you may not be thinking like this, is because you're thinking from a small account perspective. Even if you have a $100,000 account, that's still a small account in the world of the stock market. If you start thinking from a large account perspective, like a multi-million dollar perspective, and your position sizing is millions and millions of dollars per position, it's like any other business deal out there. You need proof. You need to know that your money is good there. Okay. Now there's always risk. I'm not saying 100% good, but you need to know. That's why stocks consolidate at lows for a little bit and test and retest that support or that resistance on the short. It needs to prove itself. It needs to prove that strength. So you're going to have multiple days where you can buy that support. And you can do that for a day trading perspective, be in its support, out on a nice run up just prior to that resistance, because generally speaking, selling will come in just before that. And then you're going to have the third day. And then the next day, we will, on that fourth day, it is either going to gap up or it is going to gap down. If it gaps down, that bull market is not going to happen. In fact, we're probably going to go a little bit further down into another support level, continuing your bear market. If we get that gap up, again, wait for the gap up. Don't just go long as soon as the market opens. Wait for it to come into support. Let's say there's a little high here, right? It's a wick of a candle. You can't really see it, but you guys get the point. Buy the wick of the candle and average in down to here, okay? And let's say I'm going to give you one more scenario. Maybe the 9 EMA moving average on the dailies right there. That's your risk, okay? So if it dips below those highs, it's okay. We're still above those moving averages. Add one more time into that 9 EMA and watch the gains come up, because that's what's going to happen. This day 2, this case day 4 continuation is absolute gold for the beginning to capture a bull market, okay? Now, again, we don't know if it's going to actually turn into a bull market because we need a 20% increase plus. And from a day trading perspective, it doesn't matter because we're looking to take short-term opportunities. And that's kind of how that goes, right? But that's what I start to look for. Now, in a bear market, I will be all right holding longer intraday. In bear markets, I'm fairly in and out. And I become a very incremental trader. And I discussed that further in the how to ride a bear market video. Go check that out. But in a bull market, I have no problems with intraday swings up and down. The swings won't be as great or as volatile, okay? Because in bull markets, in a very strong traditional bull market, you're not going to have those big swings up, big swings down. Why? Because the market isn't quite emotional, right? It's euphoric. It's not necessarily emotional. It's more euphoric, okay? Now you can tell the top of a bull market when every guy and their dog starts talking about the stock market. That's number one. It becomes a talking point at the water cooler. If you're investing or swing trading, that's the time to start paying yourself and start getting out of that position. Now, if you're investing super long term, don't worry about it. You're going to be able to handle a pullback of that bear market because at best, it's going to pull about 30-35%, right? And you've already rode it from low, so you're all right. But that's the one thing you want to start looking for if you're really riding that bull market. If it's uber common and it's something that every guy and their dog are talking about, it's time to start getting out of that position because the fall is about to come because it's too hot, right? Same with the watch market. It's any market, the crypto market. Once everybody starts talking about watches, everyone starts talking about crypto, right? That's the top. The top is in. So get out. That's, again, from a swing trading or a investment type of perspective. But then, because we're day traders and we can adapt, we're like water, we can flow, then we can start switching more to a short bias. Now, I'm not big on biases, and I even mentioned that in the last video, but it is something that you have to notice and you can capitalize on. Now, bull markets can be interesting for a few reasons. Bull markets will breed quite a few traders, like more and more traders will get involved with the markets, right? That's going to bring in more dumb money. Therefore, when that happens, it's another reason why that top is in, because those new traders don't know that they can't be buying up that high, and they think it's going to keep going a mile because they're in that euphoric stage and they're blind. And then that's when the hammer gets dropped. That's when the smart money, because they bought lows, is just going to pull profits. They're going to scoop up all that or sell off all that excess liquidity and make a shitload of money. And that's essentially what happens. Now, that's like more of the psychological aspect of it. And there's more technical reasons, and there can be catalysts and everything else. But riding that bull market, it becomes easy. It's very easy. You'll see a lot of people start popping up that really don't know what they're doing. That's what's going to happen in bull markets. It's very easy to trade a bull market. Now, if you learn how to trade properly, it doesn't matter what market you're in. So there is so much more that I could go over with bull markets and the technicals and different setups and strategies and tactics that I use. If you want more information on that, you can come to tricktrades.com, where I'll teach you, and we have a full video lesson library, as well as our educational department leaves no stone unturned, especially even if you are a bare bones beginner trader, or if you are a novice or intermediate trader. Trick Trades is for you. Or if you don't want to join, that is fine. Please enjoy my free content. All I ask is that you be a stand-up human being and you give it a thumbs up and you subscribe. So until the next one, folks, adios.